Hello and welcome back to Wealthy for Real. When working to get your personal finances under control, you may hear over and over a pretty blanket sentiment that the most basic financial rules to follow are to spend less than you earn, save an emergency fund, put money away to save for your short-term goals, and then any money that you have coming in after that should be invested so that your money can work and start earning money for you. But no one ever really tells you the many different ways that you can invest your money, except for the extremely glamorous depictions of stock trading and real estate investing that pop up as advertisements on your social media feeds. These common depictions make it seem like these methods are the only two ways to invest your excess income. It can also make investing seem daunting and difficult. But investing your money doesn't have to be hard and doesn't mean that you have to keep up with the stock market or buy real estate. In this video, I'm going to briefly introduce several different ways that you can invest your excess money so that it can start working for you. More in-depth explanations of these investing methods will be provided in future videos. Before I jump in, I want to give the disclaimer that this video is not intended to provide any financial or investment advice, and it's strictly for entertainment and educational purposes only. Before investing in anything, please be sure to do plenty of research and consult with a professional about what investment vehicles and strategies work best for you. Also, be aware of your risk aversion. All investments carry some sort of risk, and there's a chance that you can lose some or all of your money that you've invested. Investing your money is something that you should only begin doing once you're at a stable enough place financially to do so. This means having some sort of income and an emergency fund that you can fall back on in the case of an unexpected event. With that said, let's get into it. I'll start off with what I think most often comes to people's mind when someone mentions investing: stocks. A stock is a portion of a company that can be purchased by anyone that wants partial ownership in that company. Stocks can be openly traded to the public in what's referred to as the stock market, which consists of several different stock exchanges that give investors a platform to connect with each other to buy and sell shares of stocks or make trades. There are two general ways that you can make money from the stock market. The first is investing in companies that distribute their profits to their shareholders in the form of dividends. And the second is to sell the stocks you own at a higher price than you originally purchased them for. There are countless strategies when it comes to investing in the stock market, but they all fit within one of the following two approaches: active investing and passive investing. Active investing is a more hands-on approach to investing, where an investor buys and sells shares of stocks relatively frequently, with the objective of trying to beat the market. This approach takes advantage of market fluctuations by buying stocks at a low price and selling them at a higher price not too long after, to try to make more immediate, short-term financial gains. Passive investing, on the other hand, consists of an investor buying stocks with the intent of holding them for a longer period of time. This is usually to take advantage of the natural value appreciation of the stock market that's historically occurred over time. Investors that invest using this strategy typically have an objective to match market returns over several years, as opposed to trying to beat the market over several days or months. Next up, bonds. A bond is basically a loan that you can make to a corporation or a government that pays you a fixed amount of money in interest until the maturity date or the end of the loan, when the face value of your initial investment is paid back to you in full. For example, let's say Company X is issuing bonds with a $1,000 face value and a 5% interest rate, also called a coupon rate, that matures in 5 years. This means that you would loan the company $1,000 today, and they're obligated to pay you back 5% or $50 a year for the next 5 years. At the end of the 5-year term, the bond matures or becomes fully due, and the original $1,000 is paid back to you. Most bond issuers pay out fixed interest payments biannually, but there are also cases where payments can be made to investors monthly, quarterly, or annually. If you don't want to wait until the maturity date to cash out on your bond investment, another way to make money with bonds is to sell the bond on the secondary bond market to another investor that's willing to buy the bond from you at a higher face value than what you originally paid for it. Although no investment is risk-free, bonds are typically considered less risky than stocks due to a company or government's obligation to pay back the bond, whether the company is profitable or not. But there is always the risk of the issuing company or government entity defaulting on that bond. One of the most glamorous forms of investing that's often portrayed by gurus and influencers is real estate investing. Just like stock investing, there are far too many real estate investing strategies to cover in just one introduction video, but I will give a brief description of a few of the most popular. If you're a fan of one of the popular home makeover reality shows out there, you probably already are familiar with this first strategy: house flipping, also called rehabbing. As you likely know, this strategy focuses on buying a house for a price substantially under market value, making improvements to the home, and then selling it at market value in hopes of making a return on the initial price of the home, plus any cost of improvements made. Wholesaling in real estate is another method of flipping a home, but without having to technically purchase the home being flipped or make improvements to it yourself. Whenever you see the Instagram and YouTube gurus saying, "I'll show you how to invest in real estate no matter how little money you have or how bad your credit is," this is likely the method that they're trying to sell you. When wholesaling real estate, the investor finds a highly motivated seller that's willing to sell their home at an extreme discount. Once the seller and the wholesaler agree upon a sale price, the wholesaler puts the home under contract, which basically gives that investor the exclusive right to market that home to other investors who actually do have the capital to actually purchase the home. But when the wholesaler markets the home to other investors, she adds an additional fee to the previously agreed upon price, which she'll end up taking home as profit. Getting into some of the less sexy methods of real estate investing, the next strategy is buy and hold real estate investing, or landlording. Just as its name implies, this strategy focuses on buying real estate not with the intention of selling it quickly for fast cash, but with the plan of holding on to the property for a long period of time with the benefits of cash flow from rent payments, value appreciation of the home, equity buildup, and tax advantages in mind. Investors that want the long-term cash flow of buy and hold, but not the long-term headache of landlording tenants, seller financing might be the strategy that works for them. Seller financing, also known as owner financing, is a real estate transaction where a traditional mortgage lender does not need to get involved. Instead, the investor agrees to sell the home to the buyer directly on a type of a payment plan that allows the buyer to pay them a down payment up front and subsequent monthly principal and interest payments. In this time period, the deed of the home belongs to the buyer, so the investor is not responsible for any maintenance to the home, only for collecting monthly finance payments until the home is paid off, essentially making them the bank. If an investor wants to expand outside of the scope of residential real estate, there are several ways to go about it. Commercial real estate includes multifamily properties, office and industrial buildings, retail centers, hotels, self-storage facilities, land, and more. Investing in commercial real estate usually requires a bit more capital to get started, unless you dip your toe in with the final real estate investing strategy: Real Estate Investment Trust, or REITs. A REIT is a company that owns, operates, or finances income-generating real estate by pulling together smaller investments from several individual investors. Individuals that invest in REITs are given the opportunity to invest in commercial real estate properties without having to front the entire bill or manage the day-to-day operations of the investment properties being funded by them. The next option for investing your excess income is into a business. Keep in mind that this video is specifically about ways to invest so that your money can work for you. So when I bring up putting money into a business, I don't mean starting a new business from scratch and building it from the ground up. In this context, investing in a business would consist of putting your money toward either an existing or a startup business. When investing in a business, there are two ways to do so: investing in equity or debt. Equity is what you may think of when you see shows like Shark Tank or hear of venture capital. Investing for equity in a business means that you give that company a sum of money, and in exchange, you receive a percentage of ownership in that business. This means that your return on investment is directly tied to the financial performance of that business. Debt, on the other hand, is essentially a loan that you're giving to the business. In return for an upfront payment, the company pays you the money back in monthly installments with interest added. With debt, your return on investment is determined upfront by the terms of the loan. If you decide that you want to take this route in investing, but don't have enough capital to feel like you would make a dent as an individual investor, there are options available such as crowdfunding and peer-to-peer lending, where businesses seek small amounts of capital from a large number of investors in order to reach their fundraising goal. Crowdfunding and peer-to-peer lending work essentially the same way, but the main difference between the two is crowdfunding typically buys the investors equity in a company, and peer-to-peer lending usually uses the debt model to repay the investors. The final investing method that I'll cover in this video is investing in currencies. The most well-known examples of this are investing in Forex and cryptocurrencies. Forex is a shorthand term to refer to the foreign exchange market, which is the largest financial market in the world. The foreign exchange market allows individuals, institutions, and governments to exchange one currency for another. This is done millions of times a day for a number of reasons, but traders that are in the market as investors do this for the sole purpose of making money. Investors try to make money in Forex by speculating on the changes in two currencies, called a currency pair, against each other. For example, if a Forex trader purchases the USD to CAD currency pair and it has an exchange rate of 1.25, that means that $1 US is currently worth $1.25 in Canadian dollars. Let's say that the investor holds on to the currency pair, expecting the value of the US dollar to strengthen against the Canadian dollar. In other words, the value of the Canadian dollar would decrease. That would mean that if the exchange rate of the currency pair does decrease to, say, 1.20, the investor would have made a profit. Here's a more real-world example of how this works. If an individual invests $500 US to purchase the USD to CAD currency pair at an exchange rate of 1.25, she would have essentially been receiving $625 in Canadian dollars. If the exchange rate then goes down to 1.20 and the investor sold the currency pair, the $625 in Canadian dollars would no longer be worth $500 US. It would now be worth $520.83 due to the new exchange rate, giving the Forex investor a profit of $20.83. Last but not least on the list is investing in cryptocurrency. Cryptocurrency is the newest investing method of all the others mentioned in this video. The most popular cryptocurrency, Bitcoin, is a digital currency that was created in response to the 2008 financial crisis, which was ultimately caused by other financial markets' reliance on banks and other financial institutions to act as middlemen. The idea behind Bitcoin was initially for one individual to be able to pay another directly without the payment touching any other hands in the process or being subject to the authority of any centralized institution. Since Bitcoin's inception, there have been countless other cryptocurrencies that have been created over the years. When it comes to investing in cryptocurrency, it works pretty similarly to investing in the stock market. The idea is to buy cryptocurrency at a low price and eventually sell it when the value of the cryptocurrency has increased. Some people may do this actively and buy and sell cryptocurrencies often, taking advantage of its massive short-term fluctuations, and others may put money into cryptocurrencies to hold it there in hopes that the value will increase substantially over time. It's important to reiterate that all investments harbor some degree of risk, but the age and uncertainty of how cryptocurrencies will play a role in societies in the future makes investing in cryptocurrency especially risky. With all that said, if you made it this far through the video, thank you for watching. I'd also love to hear from you. Are you at the point where you're ready to start investing some portion of your income? If so, which investing method are you interested in learning more about? Is there any investing method that you're interested in that I didn't mention in this video? If so, let me know your thoughts in the comments below. Also, if you found any value or learned anything new, Please like this video and subscribe to the channel to get more videos with information on small steps you can take today to reach the goal of becoming wealthy for real.